Yeah, welcome everyone. It couldn't be better. I guess this was very thoughtful how the session was put together. So very foundational how ChatGPT and LLMs changed learning and memory. I go now into a very specific application, how people use LLMs to get financial advice. So anyone who used ChatGPT or other models to get some financial advice, how to invest into the stock market and so on and so forth? Nobody? Okay, Roger, what did you do?
Yeah. There's like a question if I'm unsure about how far my taxes.
Oh, okay. So tax mitigation strategies.
Yeah.
Yeah. Okay. Good. Yeah. Even.
I use it quite often, but it doesn't have enough information, knowledge to get back to me. You know, earnings calls, predictability on earnings, predictability on prices, predictability on one versus three or four other in the same class. Assimilate as many as you can in a single file, and narrow the options down to 2 or 3 rather than having 100 to look at.
So you're not as deeply impressed, but I recall from Eric's talk, you're an expert in finance, right? So maybe it's difficult to impress you. But I think this short Q&A shows that people start to use these models to get financial advice, right? So this is strong work that I'm sharing today with one of our doctoral students in our group, Hildebrand, and Jochen Hartmann from the Technical University of Munich. So again, there's a seismic shift in finance, how LLMs are used in all kinds of organizations. If you think of institutional investors, JP Morgan is using it for coming up with new EDCs. So they have something that's called IndexGPT. It's a totally different approach to come up with EDCs. So instead of looking at specific sectors, they're using it essentially to search for keywords and then come up based on these keywords with completely different investment options that maybe a human has not thought about before. And then also second, we see that people, like this short Q&A showed, are starting to use it to get financial advice. And also that companies making money out of this. So you can buy now all kinds of templates. So if you want to, get a template for, being better on, tax mitigation strategies, as Roger is using it, or retirement planning, you can buy these templates right now from all kinds of companies on the web. There's also been an interesting article where people actually in finance claim, well, this is something that people should use. So ChatGPT can guide individuals in choosing appropriate investment strategies based on the goals, risk tolerance, and time horizon. So, and she's actually a financial advisor. So people have started to recommend, hey, this is actually very helpful for people. And what I can already share right now is for very basic tasks, yes, it is. So to come up with a budget, for instance, to get some basic information about tax mitigation strategies, for those basic tasks, it's helpful. But what we're looking at is how good is it really to give us very specific financial advice to come up with a portfolio, for instance. So when you ask people, well, how good are LLMs at providing financial advice? What is interesting, this was actually this year, was a basic survey asking people, how good do you think these models are at providing financial advice? So what you see here is overall, 74% of people believe that ChatGPT and other LLMs are actually really good at providing financial advice. What is very interesting, I'm not going into depth here, but look at these numbers and the age cohort differences, right? So the younger people are, the more they believe, and it's only 12% or 10% believe, I probably shouldn't trust GPT, but the large majority of the young cohorts think, this is amazing, we should use these tools to get financial advice. So the question is, well, should you follow this advice? There was an interesting article. They said, well, we took $20,000 and we put half of it, so 10K, into crypto and 10K into the stock market, and we let ChatGPT choose essentially what should we invest in specifically. So it looks like after a month that ChatGPT was quite successful. So within a month, it was a 6% increase for the stock market and even more for crypto. What's very interesting, when you look at the underlying assets, well, it's very concentrated. So most of it is really in US-based stocks. Most of it is especially in tech, pharma, energy, and a little bit in financial services. And you might think, well, you're a finance expert. You might think, well, this is what is happening in financial markets when you look at ETFs, for instance, anyway. But it's much more concentrated compared to, for example, a passive ETF, for instance. So the 3 things we're looking at in the paper is first, well, what happens to an overall portfolio when we ask ChatGPT to put together an entire investment basket for us. Second, well, this is always something I can share with you. There are some biases that we will see in a few minutes. Is there any debiasing we could do? For example, also for Ada's work, I would be curious to learn later, what kind of debiasing people could do to become better with learning, right? If I would specifically ask, for instance, could you give me a bullet point list in the output instead of this conversational approach? This is probably debiasing how good people learn and remember the information. And then lastly, people have very specific investment goals, right? So people might want to invest, for instance, into sustainability, or they have other specific investment goals that they would like to be reflected in the advice. So we'll also look at how good are these models at specifically targeting an investment goal of a person. So this is our sampling strategy. So we look not just at one LLM, so we look at multiple LLMs, so we contrast against each other. Then we do the resolution by asset type, sector, geolocation, using data from Yahoo Finance, and we augmented it further with data from Refinitiv. This is a financial database where we then also send our data and query essentially the tariffs, for instance, or the amount of costs that would be occurring because of the financial portfolio. And we'll also do some performance analysis. I'm not going into depth because of time restriction about the financial performance, but I will share the key insight at the very end of the talk today. So this is the baseline that we have. So we simply ask these different models, hey, I'm either a 15-year-old, a 30-year-old, 50-year-old looking to invest $10,000. I'm not willing to take many risks, willing to take some risks, so risk neutral, or willing to take a lot of risks. And we ask specifically, what are the tickers I should invest in? So we look for very specific advice. How should I invest now the 10K in my portfolio? So I'm not going into all the metrics that we're looking at here, but we look at 5 key dimensions of risk. So the first ones are really about concentration. How concentrated is the portfolio, either by sector or by region? The third one is really more trend following. So what happens in terms of following specific things that are going on in the stock market. And the last 2 ones are really about the incurring costs of this portfolio that's coming. So, and we contrast this, here's the first set of results. We contrast this also relative to benchmark. So what would happen if we simply take this amount of money and we put this into a simple passive ETF? Okay, so this is our benchmark that we will look at. And what's interesting, this gives you an overview right now. In the first study, what you see on the x-axis, US investments versus not US investments, and different panels are for different sectors, technology, consumer cyclical, healthcare, and so forth. So what is quite, I almost would say, frightening, is that there's a lot of concentration in technology, consumer cyclical, against a simple benchmark of an ETF. So if we go one level deeper and look at the underlying risks that are occurring of the portfolio, what we find essentially is that it doesn't matter if it's BART, if it's Bing, if it's ChatGPT. On the previous slide, we just lumped all of the LLMs together. But even if you look at the specific LLMs, there's not really a huge difference here, right? So they all perform fairly poorly. They all perform in such a way that you have very high concentrated portfolios. And also these portfolios are much more costly for investors. Okay, so there's much more investment, for example, in active investment classes, where some management fee is occurring, for instance, as a private investor. So the question is, well, could we do some debiasing here? We look at 2 strategies. Could we target these biases either very specifically, we refer to this as very narrow debiasing, or can we use something that's a bit more, we call this holistic debiasing, where you simply say, look, I want to have a fairly diversified portfolio, as opposed to being very specific in the instruction in the prompt. For instance, I want to reduce, especially, for example, the investment fees or the management fees that we have to pay. So narrow debiasing actually doesn't work very well. So we see if you have a very narrow debiasing technique, you simply ask ChatGPT to not do any active investments, for instance. It's very hard for it to follow and to put this into the actual financial portfolio. What works really well is more holistic debiasing. So instead of specifying like one very small niche, for example, I want to reduce management fees, or I only want to invest in a specific sector, holistic debiasing is fairly successful, and I don't want to go into every single risk dimension, but we find this as very effective essentially across all the different risk dimensions that we're looking at. So it's here geographic clustering risk or the sector cluster risk. We find this for trend following. We find this also for the overall recurring costs of the portfolio. So last question that we're asking with that study here is what happens if you have a very specific investment goal? So in this case, what we're doing is we ask to invest especially into a sustainable future. I want to be a responsible investor. I want to do some impact investing. And we're curious to see how well is this mapped into the actual portfolio. And we're looking here at the ESG score. So every portfolio could be weighted in terms of the ESG score of the portfolio. What we're essentially finding is, well, there's not really much of a shift in terms of the mean of the ESG score. So the portfolio is not becoming massively better. But what's happening is you're cutting out the weeds at the bottom of the distribution. So where it's relatively good is you're not having any assets in the portfolio that have very low ESG scores. But what's happening, coming back to concentration here for a second, when we look at these different sectors, technology, consumer cyclical, industrials, utilities, what's happening is, you see this in a second, the gold plumb is actually shifting the concentration quite a bit. So if you look at the utilities on the far right, so we're not shifting the ESG score overall, but we're essentially reshifting the composition of the entire portfolio. But now you're completely over-leveraged and over-concentrated in utilities. So there's much more investment into solar, into energy, and so forth. So it's also creating now a new problem of having a too concentrated portfolio. So to sum up, what we think is interesting, it's one of the first empirical demonstrations that it could produce unwanted risks, and especially concentration in the financial portfolio. We're also testing or contrasting different types of interventions. So how can we get rid of these biases? I didn't go here much into the portfolio performance, but we have a very long appendix where we essentially go through the financial performance analysis. And the quick result, what's your, Stefano, your prediction? What do you think?
I think it's beating the ETF, I assume.
Yeah, exactly. So the risk-adjusted performance is actually worse compared to just taking your money and put it into an ETF. And that's coming because of the high concentration of the portfolio. And then finally, I'm not going into the language analysis here, but we also looked into the actual language that is put together. And you probably have a guess here. So it's very confident, right? It's very confident, very assertive. But at the very end, it's always saying, look, I'm not a financial advisor, right? So that's it. That's all I have to share. Looking forward to your questions. Thank you.
So Warren Buffett used to say that you have to invest in what you know. Do you think that's what ChatGPT, these LLMs do? So they actually give you a recommendation of what they know most, which are these industries that are coming up with higher concentration.
Yeah, so I'm not going to, or what I didn't show you is what our underlying explanation for this is. And I think what you're asking is really getting into what we believe is going on. And it's because of the training that you have in these models, right? So it's a lot of, lots of English text. Technology is very strongly reflected, for instance, in a corpus. So, and therefore, that's our underlying reasoning. It makes these suggestions. But that being said, I think it's something that's already shown. If you want to get high-level recommendations, it's really good at providing high-level recommendations, but it's getting worse when it comes to very specific investment recommendations. That's what we believe we show. Yeah, Mark?
Mark Fischer, University of Cologne. A very interesting study, Christian. I want to pick up on the comment by Anna. I'm thinking about the reason what is going on, because the models could have just learned that it's hard to beat the ETF, but they didn't pick this kind of recommendation, right? Do you have any thoughts about that?
Yeah, well, I mean, if you, I believe where this is going, and I think we see this already in industry, is that you build very specific models, like the index GPT, for instance, from JP Morgan. So I believe what we will see is instead of using a general purpose LLM for receiving financial advice, It is something that is very specifically trained on financial data, and for example, could then also be doing some internal benchmarking relative to an ETF. So I believe that this is something that we will see in finance. I think right now, what people are doing is you're using a general purpose LLM to receive the advice. But I believe moving forward, we'll see much more of the JP Morgan type of work.
One more?
Yeah.
Any other models besides ChatGPT, like Claude, or anything else that would give you more specific data and information on specific equities or ETFs or desire that someone might have, where they narrow the gap? They want a specific specificity of certain, not just overall sectors, but certain, certain equities and strategies that a broker would give or a financial advisor would give. Is there something like that out there now, or is it only years away?
So what's your prediction?
Years away.
Years away, yeah. So I think what we see right now is you using a general purpose LLM. So similar to Mark's point. So it's hard to really to beat you, for example, as an expert. But I believe this is a question of, how specific are these models trained on, doing exactly what a financial advisor is doing. And they're not trained for this specifically, but for example, the index GPT by JP Morgan is. So I believe that moving forward, I think it's just a question of time until these models are getting stronger to do good financial advisory. Okay, that's it. Thank you very much for your questions. Thank you.